Good day. This is the weekly technical update for the NASDAQ 100 being recorded on Sunday, May the 19th, 2024. I am going to start here on the NDX cash market chart, and I'm on the weekly chart. And as I did in the S&P, I also want to bring into conversation the alternate count, which kind of remains there for right now, but it may take priority and become preferred by the end of the week. So that's why I want to go over it right now. So beginning here with the NDX, the biggest change, of course, is that instead of this being the finishing point for cycle wave 3, I drop it down a whole degree, and it only completed primary wave 3. And that made the ABC down to the October 22 lows as primary wave 4. And then what we've been working on, considering it as a developing and now finishing primary B wave, right? So this would have been primary A, and this would be primary B. That actually is still alive, and I will discuss that in just a moment. So, but with this is primary wave 4, then it changes this from being an ABC to being 5 waves of intermediate degree. And so by taking it from that low and just flipping and going 1, 2, 1, 2, and then 3, 4, and then we're putting in a 5th wave and to finish a C wave, no, but under the alternate it would be, but to finish intermediate wave 3, and excuse me for the movement of the mouse. So we have intermediate 1, intermediate wave 2. We'd be looking for 5 waves of intermediate degree. So this was always the big difference. We had that the alternate and preferred could run together with neither one breaking any rules up to about this point. Now, being if this is just going to be the finishing point for an intermediate 3rd wave, then we'd still be looking for a fairly decent sized correction coming up. And that would be in an intermediate 4th wave. And I'll discuss that in just a moment and show you some preliminary what a 4th wave would look like in terms of downside. So, but instead, I leave it as AB and this being the finishing of a C wave. And so the difference is going to come is how this next move starts to come off. The high would remain, basically both are going to finish in the same area, whether it's a C wave or whether it's a 3rd wave, it's finishing in the same way. And because, in all honesty, the wave itself is very characteristic. They carry the same characteristics of personalities, a C wave and a 3rd wave. So here we go. So coming down, this would be primary wave 3. We have an ABC down for primary wave 4. Now we are in a primary 5th wave. This is the alternate. And then we have intermediate 1 and 2. Now we're breaking down an intermediate wave 3, of which will consist of 5 waves of minor degree, and they're labeled in sus in that color, in the orange color. So we have 1, 2, 3, and 4 in, and we're in minor wave 5. And once complete, it's minor wave 5 up to complete intermediate wave 3. Then we would pull back. So we start to add some fibs here. This actually is old. This belongs with the primary B. And the primary B wave, if it were to conclude at 19,180, and this market reversed hard off of that level, reversed hard, then this thing, I would suspect that we are in the beginning stages of a C wave. But here's the catch. Being that they have the same type of characteristics, I would expect if we're finishing intermediate wave 3 up here, and they both have that same level, 19,776, but above 19,000, we have, and previously when it was the alternate, there are numbers that go above 19,000, and that would be the expectation. So really, both counts, while one is like, yeah, expected to extend, the primary B wave, we're seeing this 5th wave extend. So not only the minor 5th wave, but now the minute 5th wave is also showing some strength and extending, which suggests that we've got another 100 or 200 points, or excuse me, another 500 to 700 points in the realm of possibilities. Okay, so let's break it down more. And this would be, I'm now going to walk both, but not as strong, because as we drop down into here, those counts would likely fall in sync with each other. Now, something else that I will add as well is that the market is getting between the S&P and the NASDAQ, they're starting to diverge just a little bit in terms of how high should they go and what are the counts, the internal counts. And I'm likely to go over. I know I already made the recordings for the S&P, and I realize that I have looked at them, but I may look at them again and just continue to, not because I need to make a decision about is it the preferred or the alternate, but just as the alternate as presented may not fall in sync with the NASDAQ, and I would not suspect that the NASDAQ could crest and drop strongly or do something opposite than that same strength being felt and seen in the S&P. So my point being is that I really do think that we need that all of the indexes and the ETFs that are related to, like the NASDAQ and the S&P, they need to really be in sync with one another. And so, yes, there's one that the weighting may be different, but overall in these indexes, the weightings are pretty much the same. All right, so back here, 1, 2, 1, 2, 3, 4, we're inside 5, minor 5 on the daily. And we have 1, 2, 3, 4 of minute. So we're in minute wave 5 to finish minor wave 5 to finish intermediate wave 3. So we can now bring it down. Let's take a look at the 4-hour chart, and we're inside this 5th wave now. So there is the minute 3, minute 4, we're in minute 5 to finish minor 5 to finish the intermediate wave C. No, excuse me, to finish intermediate wave 3. I flipped and went over to the other count. My apologies. So now inside minute wave 5, we have minuet wave 1 and 2, and then the minuet wave 3 breaks down. Now, this is where it's still not abundantly clear because we're not coming down far enough to either suggest that this is a subminuet wave 4, and we're going to go back up and finish the minuet wave 3, come back down into 4, go back up and finish the minuet wave 5 and the minute wave 5. And then on up. So there's still a lot of flipping around. Now, put that together with the fact that NVIDIA reports on Wednesday. So we could have a bizarre Monday, Tuesday, right? Because NVIDIA on Friday did close down. It's just above 20 points. So it was like 1878 or something like that on Friday, 1880. It was down on Friday for that expiration. Well, now we've got earnings on Wednesday. And also we have volatility expiration on Wednesday. So the market's going to get pushed and pulled, I think, quickly. So I think we got a lot of movement. Hopefully some different, but I think it's in terms of swing trading and maybe for sure day trading. There may be a lot of position jostling, but I think it's going to be within NVIDIA because that's where the report is coming. And so a lot of posturing back and forth, and there'll be, I think, another increase in the volatility as we lead into both the volatility expiration on Wednesday and after the close, the earnings report from NVIDIA. So that's going to put a lot of play here in the NASDAQ. But we can start wrapping some fibs around it. We've got this 4. So let me bring this back down now. Let's take a look at the hourly chart and see if I can pull down some of these numbers from above. So what I've also tried to do is color code where they are. So this is the minuet, and this is minuet wave 3, and that's what I'm looking to finish up here. So minuet wave 3 can come in as high as 18,951, 952. Or even a little bit higher, because we know the NASDAQ loves to exceed. But that would suggest that this is just a 4, right? So we look at a 1, 2, 3, 4, and we go up now, hit this, finish wave 3, drop again in a 4, which brings us back down to here, go back up in a 5, and that time we likely will break 19,000. So right now, 18,951, that's the resistance. Doesn't have to hit it. If this comes in 3, 4, we'll get one more little push to over here, and it's going to come in likely within this, I would think. So, but yet to come. A 4 and a 5, and then we still have to work on this one. So once we get 4 and 5, it's going to finish the minuet wave 5. So first minuet wave 3, then a 4, then a 5, 4, minuet wave or minute wave 5. So minuet 5, minute wave 5. And then we push out, and then we see that that also finishes minute wave 5 and minor wave 5. So we're getting up to that level where this should all start to come into play and finish. And we have NVIDIA on Wednesday. So it could be a really quick force one direction and then quickly in the other direction, because once we're done with minor wave 5, I'm going to pull it back out so we can take a peek. Minor wave 5, then we're looking for intermediate wave 3 and that bigger correction. Now, let me put this on the 5-year, and we can see here. So we would be looking for an ABC, again, an ABC down. If it is an intermediate fourth wave, let's look at what those fibs are going to look like. Again, we're already walked through where this thing can complete this and the third. And then we get a nice, bigger correction. And we're just going to take a look. I already did that, didn't I? And I'm going to put this up here at this first juncture. And just above 19,000. Let me just kind of take a peek. 19,000. Well, it will do fine. Let's see. I am going to activate the drawing and push it up to the. No, I'll go right there. So the fourth wave, 16,000, 15,000, 19. And now we'll see what happens. Look at that. If we finish up, so what's kind of what Elliott has told us all along, that once we're done, here's our next zone, back to the fourth wave of 1 lesser degree and check it out. There's 382, it sits at the top, and 618 that sits at the bottom, and we're looking for a larger fourth. This one, you do a coin toss, because I normally would not look for 0.618 on a fourth wave, but it's the NASDAQ. And so 382, nice. So that's what I'm talking about in terms of the bigger picture, no matter what. So here we sit, and we're going to say, hey, what if this does stop right up there at that 1.382, which would be for a primary fourth wave? What happens if we do get to that level? Let's just take a look. I think I still have it there, right? At 19, right where we sit, right where I think that this could end. 19,200-ish, plus or minus. If we get there on Wednesday, or the first pop or something takes it up there, and then the reality hits and there's something not, picked up by the initial algorithms, and this thing reverses and it continues to reverse, getting that kind of a drop started should not be that much should not be all that difficult, excuse me. So we have, here it is again on the little bit bigger picture. There's the window. Here's the high, the start of wave 4, the bottom of wave 4. Fourth waves, when in progress, will normally find the terminus, their endpoint within the price territory of the fourth wave of one lesser degree. If I'm correcting an intermediate third wave, the fourth wave of one lesser degree is the minor fourth wave, and here it sits. And that's what I'd be looking for. Now, that's if it's a third, and it's going to come down in a 4. If it is a C wave and it's coming down in 5 waves of intermediate degree, well, I'm going to be looking for it to go right on through 618. But you can see that's quite a large drop. So there is plenty to trade. There'll be plenty to trade. There's no need to worry about, well, where's the end point? There's going to be so much trading in here. The focus needs to be, what is this move? What is that move? What, as it starts to come down, what's going to bring it? Ultimate targets are just kind of like ongoing, because here's the deal. You're trading it. Now, maybe not every day, but every other day or once a week or whatever your trade style is, there'll be plenty to do. So it'll take a while before ultimately you could say, is this now going to stop in a fourth wave within the upper levels of our fibs and turn and go again? So intermediate 4, intermediate 5 to finish primary wave 5. Intermediate 5 to finish primary 5 to finish cycle 3. So again, I also want to add, this kind of fits because I've been talking for a while about it won't make any difference really which count ultimately takes hold. As a trader, yep, you got a ceiling that you're going to put over there a little bit now, but it's going to be, it was the same ceiling no matter which count actually comes through. We've carried it higher. I've continued to use this fib level, 19,000, and I kept saying it, but we had, some starts and fits and stuff where there was the possibility that completed it. But ultimately, we always had this top line, and now the market is letting us know, well, that's the one we're going to probably go for. So however they're going to get there, well, that's up to them. So that counts either way. Either we're going to finish an intermediate 3 and come down an intermediate wave 4, or we will finish that primary B wave and we'll start heading down in a primary C wave, which will consist of 5 waves of intermediate degree. So again, this is an intermediate third. We're looking for that now to turn and start to 1, 2, 3, 4, 5, come down and end up below there. Whereas right now, we've got a much higher zone. Here is below 10,000 or roughly down to it. And here is 14,000. So it's a difference of 4,000 points, basically. 3,200, 4,000. It's a lot. In any case, that's what the NDX looks like. Right now, though, I got to tell you, moving averages, look at them. Putting in this little rounding bottom here in this moving average, which is great because it's not necessarily the right place. But the market, if you really kind of come down and you start looking at a daily level, we started to put in rounding bottoms, rounding. So it all fits. I'm going to go over to the NASDAQ, to the futures market, the NQ, and it pretty much is the same. I'm going to go right down to my 4-hour chart because what we're really counting is the possibility that that in the alternate, that it is a primary 4th wave low in 2022, and we're in that primary 5th wave. And within that primary 5th wave, we've got wave 1 is over here somewhere. There it is, 1, 2, 1, 2. And so in this one, I had not changed this, or did I? Yeah, 3, 4. Yes, it's in a minor wave 5, but they were hiding. So let me just find these and pull them up out here that you can see them. And they'll move again. I got to tell you, as soon as I switch out of this chart, like if I do that, they will. So 1 and the 2 has now gotten up real high. So let me just go here for a second. This is just a shorter. There's primary wave 3, primary wave 4, intermediate 1, 2, and then we have again 1, 2, 3, 4, and we're inside minor wave 5. And within minor 5, we have 1, 2, 3, and 4. So this is the area we want to start to look at, because we want to start to determine where does this all finish up. So right now I can add, I believe this one will be okay. And I'm going to put in this up to there, go over to here. And you can see the 618 is sitting up, 2.618 is sitting up there. So I'm going to edit, and the rest of these are not applicable. So we'll just use that top one, and it's color coded to the minor. So this would be the minor 5. This is its next level. The 1.382, so the primary B, I'm leaving it there, but that's at 19,167. So ultimately, intermediate wave 3 could take it out. Minor wave 5 could take it out. Take this out and go up here. And then begin to correct, right? The intermediate third wave. So in other words, 1, 2, 3, 4, we're in 5, we get up here, we get up to here, we got that same deal. I got a fourth wave. But is it going to be a fourth wave? Is it going to be an intermediate degree fourth wave? Or is it going to be end of the primary B wave, and we're coming down in the initial stages of a primary C wave, which will be 5 waves of intermediate degree. So you can see how we're looking at it, right? Intermediate degree will contain big moves. This is October of 2022. This is December of 2022, where wave 3 began under this count, or where the C wave began under this count. So either one is now getting mature. So I'm looking forward to at least be done on the third wave, do a 4, and then go back up at a 5th and an intermediate degree to finish this guy. And then come down again. So one more time, whether I'm looking at it coming down now as a primary C wave, or if this is going to top out in that primary 5th wave, and then the cycle degree third wave goes above it. So everything that I've been looking at and working through from the January 2022 highs would just begin, but it's going to begin from a higher level. So it's not that somebody's wrong, somebody's right. That part doesn't make any difference. It's all about the trade. And trading now, we need to look and see what this market is going to tell us. Are you going to break higher? Are you going to go up? If you are, then maybe I need to adjust my deltas, or I need to position myself to take advantage of the strength to the upside, to take advantage of how volatility is going to shift and move around. So there'll be plenty to do, and there'll be plenty of trading. Directionally, here's what we could look for. What it's going to bring, what's going to make it do it? It's all technical at this point. I mean, yeah, we got this stuff with artificial intelligence and any company that supports or produces for artificial intelligence is on fire. And that's the way it is right now. But if this is a finishing move, they'll continue to produce and will continue to develop artificial intelligence. But I do believe the market will correct. They'll find a different reason. And it could flip back, folks. It could flip back to the reality of inflation's not under control. And so what happens then? I'm not saying that is the case. They could continue to stimulate this whole system for as long as they choose. So until that doesn't become available anymore, we have to really kind of just put it together. Now, this has opened and the market is up 18, or the future's up 18, and S&P's at 550. So I'm going to kind of wrap it up. 1, 2, 3. Still, even on this short little time frame, let's go down to the 1 hour chart and see there's 1, 2. Okay, now we built it all out. So we have 1, 2, 3, and we're down in this little 4. I am actually, because I want to see this, so we can look and see what we got going on overnight. There you go. And we're just going to open it up to see the 3 is up here. And so this would need to be a 4. And if this is, wow, now even I get like too much real estate. 1, 2, and oh, this is the 3, and it's up here. It needs to be right there. And this could be A, B, D, 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 C. This could be an A wave. We get a little bit of a B wave. What it can't do, because if it goes above that high, which is 18,723, 724. Oh, excuse me, that's so low. 18,760.75. So if it goes above that, then the 5th wave is in progress. And this would have to be the 4th. Otherwise, we come back down. And we can run fibs for a continuation of for just the 4th wave, from there to there. And again, just to clean it up, because I don't need extra lines. And we don't want, and I don't think it'll go very deep. So here we have it. And there again, there's the 4th wave, the previous 4th wave, even on this little tiny scale, right? This is minuet, this is sub-minuet. Here we have it. On the sub-minuet level, that's the previous 4th wave to this 4th wave. If the 3 is there, this is AB, we'd be looking for it to come down into here. So we have to leave open that potential that the market can drop and come back down into here and then rally one more time, getting above here and then getting up towards here. We have the others as well. We can put a 3 in, we can see where that 3 comes in, and then we can look to see where this 5 comes in. And if we have it around 19,100 up to 19,167 right now, and that fits the B wave. What do we have out? I think we've got some stuff above it. And above that, we have, now these gaps would fill in as the market progressed. So we have above this, we have 19,896. So and I got above that, I believe. I took them down. We can get above 20,000 if we're still looking. Either way, that could come in an intermediate 5th wave. And I know I'm saying a lot and it can get confusing. Now we're going back out. Primary, intermediate 1, 2. This is finishing intermediate wave 3, intermediate wave 4, intermediate wave 5 brings us all the way back. And wherever this tops out to put that 4 in, under the alternate count, primary wave 5 would continue to have a larger push. So in other words, we have intermediate 1 of primary 5, intermediate wave 2 of primary 5, intermediate wave 3 of primary 5, intermediate wave 4 of primary 5, intermediate wave 5 of primary wave 5. And if that brings us back up here or here, or even higher, then it's going to be finishing primary wave 5, and then a cycle wave 3 sits above it. So there's a lot to come. And again, now I just want to take a look at the cycles and just review the cycles. If they're going to be similar to the S&P, and right now the S&P and the spiders are really looking that we've already reached a cycle trough, and now are back in the up phase of that cycle. Those are monthly, and then we have a 3-month. And then, so the next turn would kind of point to a trough being put in, and that's a cycle trough, a cycle low, not necessarily a price low. So we're not going to be looking for the major lows to come in by the end of, now it would be the end of May into June. Excuse me, we're there. It would be end of June into July. That's where the cycle then rolls again. But there's also that possibility that it's shifting just a little bit. So it's reaching the trough or the peak early. So you can add and subtract days around that 30 mark. And as long as the market is being consistent, plus or minus a couple of days can be expected. But in any case, we don't have, I don't think, a major trough like the 3-month until September. So there's a lot of things that continue to add and bolster that we're probably heading up through the month of June and then quickly trough off. And if not, then it really is going to come in at the end of May. So again, May 22nd, NVIDIA's earnings. There's going to be, I think that a lot of our decisions will be made. Now, here's the other point. We have seen so much where the market does tear into a stock. You know, one of the bigger ones, one of the Mag 7 tears into it, knocks it down substantially, only just to buy it right back up. Now, that I think I can also put together because of the wave pattern. Because we are in an intermediate third, so if anything's going to correct, it's going to be within the context that we still have more of an intermediate third wave to do. So bearing that in mind, as we reach up to this high, we're looking for a larger pullback. And again, as I just demonstrated, or I just talked about, even here in the futures market, if we're here and we get up to an intermediate third wave and it comes in here, you're looking, here's your target for a fourth wave to come into this level. No matter what, this level will come up first. Not going to hold, but it will produce a support level there. It's a previous fourth, but the size would tell us differently, and it may break it quickly, but it will stop and look. Here's the target area for a intermediate degree fourth wave. I know, and I'm trying not to be confusing because it's this degree and this finishing the third here. We do a 4, come back into here, and then do a 5 that runs up and takes us up here. That's yet to come. So if you're looking at a timeline, you're looking at a cycle basis. Well, okay, so we get this 4, and that maybe takes us into the end of June, beginning of July, maybe. And then our next trough is not really due until September. And then you're like, okay. So 4, 5. And so as you get larger cycles that are going to begin to turn and have downside pressure, and you're going higher up in your count, then you're starting to move into, okay, primary wave 5, cycle wave 3. You know, what kicks it off? What starts it? Oh, we got plenty of that. Okay, I'm going to leave it there. This is enough. And again, no real major numbers coming out next week. We got some at the end of the week, of course. Initial jobless claims, and the S&P puts out their PMI data. So the next Elliott Wave update will be tomorrow, May the 20th.